Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is November 16th, 2015, and today's Monday morning. So looking at the economic calendar today, early this morning we had a Japanese number that came out. It's a GDP number. We'll look at the graphs, how that affected the markets. And then at 12:15 p.m. this afternoon actually, early afternoon, we have President Draghi will be speaking, ECB president. That should affect the euro. And then at 2:30 South African time, we have a Canadian manufacturing number coming out. So without much further ado, let's discuss what's going on with the GBP Japanese yen. 63 pips, we gapped down this morning. So altogether, major gap down for the GBP. We're at somewhat of a as you can see here, we hit this resistance at 95 on a daily, and we're between this 180 and 195 ranges on a daily chart. We have, I would say, a little bit of a subsequent resistance at 187-ish level, and as you can see, we're at that top of that range right now after selling off harshly, as you can see here. So we filled the gap, so to speak, okay? And we're right now, we filled the gap with the previous sell-off, and we're right now gap down right here. So the question is, are we going to fill in the gap? And that will remain to be seen. My inclination is that we're not going to, because we've hit this double top here on subsequent occasions, and now we've gapped down. As you can see, this is a gap. This opened up this morning with a sell-off, and we're weak. We're at the bottom of that range. So be more inclined to think that this will go down, but again, you know, filling the gap is a technical trade, so we may just fill in this small gap. Looking at the Euro USD, flatlining here at 107.283. As you can see, I mean, we've sold off from this 114 level earlier in the month, rather since last month, the end of last month, and we're now trading at 107. So that's a big retracement for the Euro USD. Still, I would say, still very weak. I mean, we're only 300 pips away from our all-time lows for the year, and we're testing it. So, you know, let's see how these things unfold. Let's see if President Draghi can inject some sort of optimism into the markets, especially after what happened, the horrific terrorism attack that happened over the weekend. You know, it'll be a somber mood for the euro. And my hearts and prayers go to the families of those victims, just as a personal note to those people. Looking at the Dow Jones also sold off quite harshly last week. Altogether about 700 points sell-off last week, and this is to expected. We're coming in right before Thanksgiving. Thanksgiving to Christmas, Thanksgiving to New Year's is usually a rally in the market, and as such, you know, I would expect this to bounce between that time. So a sell-off is expected. The stocks are really strong still. If you look at Microsoft, you look at, you know, some of the Amazon, you look at Apple, you look at some of the bellwether stocks in the States, they're still very strong. So the market is still very strong. So I would expect some sort of bounce from the Dow after Thanksgiving. But like I said, it was somewhat to be expected, especially since we came up from this. Let's just bring the graph back up. Since we came back from this 15,000 to the 17,000, almost 18,000 levels. So, you know, this sell-off is understandable. Okay, it's a healthy sell-off, so to speak. So the question is what out of the bounce, what didn't retrace once the sell-off started, and those are usually the ones that are stronger in order to buy them. Looking at oil here, oil becoming very weak, as we said before. If you mentioned last week's daily review, I didn't think that we would hold this line, and we didn't. We're trading at $40.94, and we're, you know, going into the winter season, and, you know, this is when historically oil is in high demand and should, okay, that I use that term very loosely here, should rally, but it's not. So it's showing you how weak it is, and the glut of of surplus of oil in the world is affected by the price, as you can see here. Gold just doesn't want to go away yet, trading as low as 1075 here, but then bouncing to 1095, not ready to break the $1,000 mark. And that could be justified. I mean, if we take inflation into effect over the past 10 years, it might be justified, because looking at a historical graph, and I remember this, okay, I remember this back in the early 2000 era, we were trading at $300. You know, we had some gold, and we had some surplus of gold, and you know, it was almost not even worth it to sell it. But as you can see here, we rallied all the way to 189, 1,890, and we're just, you know, retracing back to these levels. So, you know, ultimately speaking, you know, gold has been the go-to haven for investors when the markets were really weak. But as you can see here, things have retraced and things have taken a hit, and it's not clear when this will be back. And what I'm saying is, ultimately, is it justified at $1,000 with, in light of inflation? Yes. Could we hit below $1,000? Perhaps, and we could hit 884. And I still feel that, you know, that this has, you know, a way to go, because every time we rally, we kind of, you know, somber off. Every time we rally, we somber off. It's not really a rally, but, you know, every time we try to break it higher, we break down even further. So, you know, it remains to be seen how strong this thing is, and if it's going to have a turnaround. So my inclination is that it's going to continue selling off into the market. Now, looking at the ZAR, that's obviously being affected by what gold is happening. I mean, I was speaking to somebody yesterday about, you know, the production in South Africa, and you know, unfortunately, there's a lot of labor disputes. There's a lot of injustices between management and the labor department, and you know, that's being really affected in the manufacturing of goods and items in South Africa. And as a result, you know, South Africa is waning behind the economies of the world, and that's being affected by the ZAR. The ZAR is being affected by that. So, I mean, in the past 4 years, we've went from 7 Rand per dollar to 14 Rand per dollar, and that's a huge retracement, and it's a huge decline, and it's a huge sell-off. So keep that in mind, and you know, just be aware that, you know, the Rand is still very, very weak, and we look like we're breaking even higher. I mean, this thing could go up to 20. I mean, there's nothing holding it back, and you know, people don't want to accept reality, but you know, that this is absolutely, I almost want to say insane, but in a way it's justified because of what the numbers are showing for South Africa's production and the devaluation of the gold. So unfortunately, this is the situation in South Africa, but as traders, you can take advantage of it, change your money into dollars, okay, and sell the Rand, okay, and buy dollars. And basically, you'll be curtailing yourself and hedging yourself against the Rand's devaluation. Okay, and I don't want to leave it on a somber note. There will be many opportunities always, and just you know, if you persevere over time, you will make money. This is Razak at CMTrading. I want to wish you guys a great trading day. Thank you.